Since 2012, every time Bitcoin's low has come in October, Q4 has rallied. But when the lows come in November or December, it's almost always been a cycle top or a brutal dump. So this year, October could decide everything again. Today, we're breaking down the stats for Q4 that no one's talking about, why this cycle is still different, and exactly how I'm positioned going into the rest of the year. So, if that sounds good to you, let's get into the show. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. Hey guys, I'm Alessandro. Welcome back to the show. September gets all the bad press as Bitcoin's worst month, but that's not really true. August is Bitcoin's worst month. And here's the stat that matters. When September closes green, Q4 has always been green. And this year, of course, September just closed green. But if we split September up into two halves, it gets a bit tricky. Since 2012, if the second half of September is green, Q4 closes green 90% of the time. If the second half is red, Q4 is usually weak, actually going down on average about 7%. This year, we got a green September overall, but the second half closed red. That's why October's critical. Since 2012, every bullish Q4 has started with the low being set in October. If October sets the low, Q4 rallies. If the low of the quarter comes later in November or December, history says it usually marks a cycle top or a brutal dump. So, timing is everything. October low means a green light. A November or a December low is a massive red flag for the rest of the cycle. The macro picture adds fuel. The Fed has already cut rates at the highs, and markets are pricing a 99% chance of a cut this month and 2 cuts for the rest of the year. The S&P 500 and gold are both at all-time highs. That's supportive for risk assets like Bitcoin and alts. But this cycle is not like 2021. Personally, I don't really think we're ever going to see that same kind of frenzy that we saw back then. There was a very unique situation where you had people with lots of time because they weren't working. People also had disposable income because they weren't working, they had nothing to spend their money on because everything was shut, and they were continuing to get this furlough payments. Plus, there was a frenzy in general investing interest as asset prices were running harder than ever. It was like the perfect storm. But now, people have less time. People have less money than ever. Credit card delinquencies are at all-time highs. And there's far less appetite for people to be taking risk in alts coming back to the market that wrecked them in 2021. We also have the complete opposite in the alt market. Back in 2021, it was the onset of the low float, high FDV tokens. This was when they came into the market. And now we're paying the price. 2021, there weren't many tokens in circulation. Today, most of those tokens are getting close to their fully diluted valuations. There's constant inflation all of the time. Just this month, we've got about $4 billion in token unlocks in October that are going to be hitting the market. That's $4 billion added to the altcoin market cap without any price appreciation in the tokens. And this ties us in for perfectly comparing Bitcoin against altcoins. For Bitcoin, the bid looks strong. ETFs now hold around 6.7% of the supply. Digital asset treasury companies hold another 5%. That's real structural buying pressure that hasn't been there in past cycles. Altcoins are a different story though. Take Solana. Its market cap is almost double its 2021 peak, but the token price still hasn't made new highs. That's because of token unlocks and inflation. Athena, a darling of this cycle, one of the best tokens supposedly to hold. Its market cap is higher than ever, but the token is still down 50% from the highs. Again, we're seeing network value grow while holders essentially get poorer. If there's no mechanism to push value back to these tokens, holders get diluted. So what am I doing? I'm positioned for a very strong Q4. If we get pullbacks, I'm buying. We've seen those October stats. October pullbacks seem like they're good buying opportunities. But I'm already fully allocated, for the most part, to my highest conviction bets. These are the ones I've done past shows on: MNT, structural demand from Bybit, Hype, almost needs no introduction. Pump, comparing it to Hype on a revenue basis, looks even better value. Yes, I'm also holding a strange little frog that completely breaks this fundamentals thesis. check out the show I've done here on that if you want more information. But these are projects and tokens that I've done extensive research into and have enormous conviction in. I've previously done shows on why I think holding less tokens is a better strategy if you haven't got an enormous portfolio, and I still think that's the case. It's much easier to hold conviction in a few tokens that you've done extensive research and have good knowledge about than it is to stay on top of multiple narratives, multiple tokens at the same time. And for me, that's the big lesson of this cycle. Number one, having conviction helps enormously. You cannot borrow it from other people. You can't take what other people have done research into and strap it on as your own idea. The only way to survive pullbacks in crypto is to build conviction in tokens that you understand. And we've also got the enormous staking rewards and token unlocks that can kill projects. Tokenomics are more important than ever. Checking these using tools like CryptoRank to understand when these are happening is vital. So here's the takeaway. Q4 is usually strong, but this year, everything depends on October. If the low's already in, history says the rally is on. If the low comes later, November or December, it usually means the cycle has topped. Bitcoin's still got the strong bid from institutions, but altcoins are facing inflation, unlocks, and generally weaker demand. That's why I'm sticking to the plays that I have the most conviction in and ignoring the rest of the noise. But I'm only holding my highest conviction bets, the things that I think have a very strong chance of continuing to do well because they've shown strength in the past. The tokens that are doing well already are much more likely to continue to win. We see that in traditional stocks, we see that in crypto. Bitcoin has been the number one forever. These tokens don't just suddenly start doing well because they were doing bad. Personally, I think that's probably a losing strategy. So that covers it. Thanks ever so much for watching. Make sure you check out my show here on why I think less tokens are a better strategy if you haven't got a big portfolio. And check out my show I did here on Solana and Ethereum and other proof of stake chains and why they're actually trading above their 2021 highs, despite the fact the spot token price action doesn't look like it. Thanks ever so much for watching, guys. I shall see you in the next one.